Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and in the last segment, we were talking about that Fitch rating, how it really rocked the markets, the downgrade of the U.S. credit rating from AAA to AA plus, and really the markets have been, especially Wednesday and Thursday, showed some major weakness, dropping down about 2.5%. But a lot of that is because of that U.S. dollar, which I'm going to get into here in a minute here. But if you did miss seats for that investing class that we do here locally, just text the word investing to the number 210 right now for 2 seats for this class. When you do that, you're going to receive a little giveaway. It's going to be the jumbo pack. When you text in, well, if you don't, well, you'll have a landing page that you can pick your own date. There's going to be a link in there. It'll say, "Welcome to Investing and Trading Live." It'll let you know about your jumbo pack. And then you pick your own date through that link. If you, by chance you don't do that, we'll get you a call. Make sure we find a date that works for you, and make sure to mention that you want that jumbo pack when you come in. There's some great strategies on how to get started right away. Income strategies for up markets and for down markets, but also retirement strategies, which we'll get into in the next segment here. But text investing to the number 210. So, Al, we did talk about in the last segment with the market dropping here. And really, one thing to note before we go into the next topic here is the U.S. dollar showing. I mean, it's been in a downtrend for several, tens of years. But that being said, over the last, I'd say almost a month here, we've shown some strength here in the U.S. dollar, which is really driving, I believe, a lot of the stock market declines. The U.S. dollar going from 100, almost 100 even, up to 102.75, depending on when you listen to the show here, and showing some strength there. So that could, if this dollar continues to go up, which is more purchase power for our dollar, that could continue to drop the stock market. And there's just correlations that we like to use in our trading and investing strategies, especially if you're looking for an income strategy. I mentioned, I think it was last week, I was talking with somebody on a plane, and they were talking about how people were just, they weren't, excuse me, they weren't, their priorities were different now, right? They didn't want to work for things, and they thought things had to be given to them, and they needed more because they were expecting raises and not having to work for it.
Right.
So we're seeing a lot of people that are coming to the academy right now. Great people, right? They have great jobs. They are working hard, but some of these jobs just don't pay enough. They even though they do well, we're seeing people coming in that, six-figure income isn't really that good anymore, but there's a lot of people that make that now because wages are higher than what they used to be 10, 15 years ago. I mean, we know that. But they still want to have more strategies to have a better financial life. And there's a few reasons why they do that. I want you to discuss that a little bit. Why do you think so many people that are doing well right now financially are coming here to the academy for that second income strategy, to have that opportunity to build that second source? What are some of the things that you're seeing that they're wanting to accomplish with that?
Well, first of all, even though you're in that six-figure income, the cost of being alive has gone up significantly over the last few years. And when you look at a figure of about 68% of the people in this country living paycheck to paycheck, that includes a lot of those six-figure income people. So they're understanding, they're realizing that, they're working hard for their money, but their money's not working hard for them, and there's very little money left after the cost of living is taken care of.
I like how you mentioned that. It's not working hard for them.
Yeah, exactly. And I think I like to look at every dollar that somebody has as an employee. If you have a business, every employee you want to get the maximum productivity out of. If you have one employee that comes in every day and just goes in the corner and lays down and sleeps, that person is not very productive.
Yeah, that's kind of like how I used to kick the show off that some people didn't like. I used to say, we're going to talk about strategies to turn $1 into $2 into $3. Some people didn't like that, but that's what people are looking to do.
Exactly. The power of compounding is huge, and that can have a huge impact on the quality of your life, not only now, but in the future.
Did you say huge or huge?
Huge.
Oh, I thought you said huge.
No, huge. It's Huge. But why are people coming? Why are they looking at additional income? Well, it really boils down to, I think, one word, and that's freedom. It's not about how much money you can make, but it's about how much freedom you can achieve. And that's being able to do the things that you want to do when you want to do them because you can.
So freedom of time is what you're talking
Well,
about,
freedom of time
and
is probably the
choice.
most valuable asset we have that is a decaying asset
One thing we can't get back.
you can't get back. But by achieving additional sources of income, most people that don't understand the markets think that means they have to get another job or second or third
More
job or
hours,
part-time
more
job.
time away from the family.
Exactly. That's
Explain.
time away from the family, and that's not maximizing the value of your time.
Yeah, real quick, explain what the market has, the opportunity the market gives to be able to do this and still have the time with the family.
Right. Well, once you learn a strategy, and by the way, if you're going to do any kind of trading or investing, you have to have a strategy. You can't just look at a stock and say, "Oh, I'm going to buy this because I think it's going to go up." That's not a strategy. That's guessing. That's hoping. A strategy is something that's going to give you the greatest probability of having whatever the position is you take move in your favor with a high profit potential. And what we like to do is have people identify what their goals are. In fact, you might want to do this when you get home, or if you're at home, write down what you want your future to look like. What do you want your financial future, your life to look like down the road in 2 years or 5 years or 10 years? And then ask yourself this: where you are right now with what you're earning, what you have, are you on track to be able to do that? And don't just write down what you think you can have based on your income right now and the fact that you probably aren't going to make much money trading or get a raise, whatever it is. You just look at what your ideal future looks like. How do you want to live in the future in your ideal world? And then are you on track to get there? And if not, maybe you need to do something different. One of the things that we do in our classes is first have people identify what their goals are, where they are now, where they want to be in the future. And for everybody, there's going to be a best way of getting there. It may be different for everybody in the class, but for you, there is a best way to do that. And that's one of our goals, is to help you find what that is, how to bridge the gap from where you are now to where you want to go in the future. The reality is this: even if you're in the market, and a lot of people say, well, I have a mutual fund, or I have a 401k, I have an index fund, or whatever it is. The reality is that over time, the S&P 500 has averaged about 9.5% annually. The average equity fund has only returned about 5.02% annually. That's almost 4.5% difference there. Why is that, and what kind of an impact could that have on you? Well, think about it. At 9.5%, which the S&P has returned. And by the way, if you're in a S&P 500 index fund or mutual fund, you're not getting that kind of return. You're getting closer to that average equity amount because of the costs involved, the fees and the transaction costs. But if you're getting 9.5%, your assets will double in 7.5 years. If you're getting 5.02%, which the average equity fund is returning, that takes over 14 years, almost 14 and a half years to double. That's a huge difference. And just by having that additional return, that can make like I said, a huge difference in your life now and in the future. So is it possible to be able to do that? Well, certainly it's possible, but you're probably going to have to do something different that you're doing right now. The average equity fund is not doing that for you. The average equity manager is not providing those kinds of returns. So is there a way of having the opportunity to do better? There are assets that we teach in these classes called leveraged assets that allow you to take a smaller amount of money, but control something that's a multiple of it, like a mortgage. You put a down payment on a house, and then you have a mortgage that is leverage for you. You can do the same thing in the financial markets, and these leveraged assets also happen to be ideal for generating income because they're shorter term in their nature.
I like that. I want to give away some seats to an investing class so we can introduce those assets that you're talking about. But stay tuned after that. I want to talk about how to have the best opportunity to do that coming up here in a second. But we have these classes here locally to introduce you to these assets that Al is talking about that give you the opportunity for that income strategy on top of your job. That way you don't have to leave your family because as long as you have internet connection. I mean, heck, that pine tree probably has internet these days with what's going on. So text investing to the number 210-210 for 2 seats for an investing class to be introduced to these assets that are designed for income. on top of your job. You say you work during the day or you work in the evening. They're actually, some are open actually 24 hours
Right.
a day.
Mhm.
When you do that, you're going to receive that jumbo pack. So text the word investing to the number 210 for 2 seats for that investing class, and we'll introduce you to these topics we're talking about here today, the different assets that are designed for income. So as I mentioned, I want to give you guys the opportunity to have the best opportunity to make that work. Now, you mentioned something very interesting a little earlier. You said something along the lines is people don't think that they'll be able to do it. They're not
Mhm.
sure that they can do that.
Right.
And by thinking that, you have already put yourself at a disadvantage,
Exactly.
right? And one of the things, and some people might, listen to this and say, "Oh, that's horse manure," but this stuff is actually true. They do a lot of studies on this, and it's positive affirmation, right?
Mhm.
Now, there's different things that you can do to kind of get yourself into that mindset to do something. You can either say, "I hope this stock goes up," or you can say, "I will have a strategy to follow the right direction of the stock," or "I have a strategy." And you can train your mind to do that, because the more and more you do that, the more positive you get. Positive outcomes come from positive mindsets. And you need to say these affirmations out loud. Use them in the present tense.
Mhm.
Like, I am a great stock trader. Not I hope to be a great
Right.
stock trader, because you will never make it there then, because you're always going to be smoking the hopium. Try not to highlight the negative, and then choose meaningful affirmations. So if it means something to you, if it's important to you to have another income strategy, have yourself in that present tense doing that, and visualize yourself doing that. If you visualize yourself doing that, you have a higher opportunity to get there than somebody that doesn't actually visualize, because if you don't visualize it, you'll never see
Yeah.
that.
You
And I
know,
want you to go ahead.
yeah, what I was going to say is ask this question. Why do people feel that way? Why do people not have the confidence that they can be
You've
successful?
been told you
You've
can't.
been told, you've been conditioned not only by maybe the media or Wall Street, they want to convince you you can't, but also maybe by your family members, by your friends. Maybe it's because they don't want to see you succeed. I mean, you hate to say that, but sometimes that is the case.
Human nature wants somebody else to not succeed.
Sure, yeah.
You ever see, there's never any parties about, someone starting a business or someone doing well on trading and investing. It's always, haha, you did that wrong.
Yeah, right. So, we've been conditioned to do that, but you're exactly right. And I've always said that I think a majority of the reason that people are successful is because of their attitude. They have a positive attitude and they imagine themselves being successful. But even words, single sentences can have an impact on the way you behave and the way you pursue your future. I think that in the beginning of this section, you asked me, I think about we talked about time, I guess is what
Mm-hmm.
I'm trying to say, is the value of time.
Yep.
And I started by saying that you have to have a strategy. One of the things that strategy should do is show you how to be able to do this in a short period of time, not putting a lot of time into it. But once you learn a strategy that gives you the ability to be consistent in the kinds of returns you have, then you shouldn't have to put in more than a few minutes to put an individual trade together. You don't have to go through what Wall Street tells you to do, which is spend an inordinate amount of time analyzing things using technical analysis, which are lagging indicators. Just follow what the big institutions are showing us they're doing by using a strategy that shows you how to do that. And being consistent in your returns is more important than looking for huge home runs.
I like that. It's consistency what brings you success in the markets. Now, when people we're gonna have a lot of people coming into these investing classes. We have all summer, and it just seems like more and more people are coming in. But when people are coming into this investing class, I want people to ask me, because I'll be here as well. Ask me about there's actually a book to help guide you through those positive affirmations, and it's one I really like. So when you come in, make sure to ask me, what is that book about positive affirmations to help you be successful in the financial markets and have that opportunity to do that. And it's just having the right mindset. But just text the word investing to the number 210 right now for 2 seats to this investing class that we do here locally. Talk about different strategies for income, wealth that we'll talk about in the next segment. And when you do that, you're going to receive the jumbo pack. There's strategies in the jumbo pack and to help you get started right away. So text investing to the number 210. You'll have a link in there to pick your own date. Coming up next, let's talk about those wealth strategies. Since we just talked about income, let's talk about how to use that income or extra income to build wealth. This is Josh and Al. We will be right back.